So really do feel welcome. We believe that this is an important forum because it's part of our mandate to increase understanding about the policy and legislative as well as the regulatory environment in which we operate. And I really want to thank our colleagues from the Kenya Revenue Authority for accepting to talk with us or take us through the digital service tax. And we believe that this is important. I think the sector really does need to understand, the matter. And if they have any specific questions, they will be able to ask those questions. I want to again thank our colleagues. I want to especially thank Madam Wanja Wangondu, who is the manager, Tax Education, Marketing and Communication Department at KRA, because when we wrote to them to seek their support, she was very responsive and quick and was able to help us get the team that will take us through today. I also want to, therefore, I want to thank you, Madam Wanja, for that, and you will be with us in this meeting. The other members of the Kenya Revenue Authority that are with us include Mohammed Kasim, who is a senior revenue supervisor within the Domestic Taxes Department. As you know, many of us work in the SME sector, and I think that it is important that we get a sense of these matters. The other member is Lydia Olumbe, who is the Assistant Manager, Tax Education, Marketing and Communication Department, as well as Martha Ngoko, who is Tax Education, Marketing and Communication Department, and with whom I have been talking over the last couple of days as we were planning today's forum. So colleagues, really feel welcome. And I think I would like now to hand over to the team. They know how they will sequence themselves. And as I said, we have time until 4 o'clock. If it becomes necessary, we can add more time. But obviously, we understand that people are busy and they might have other things to go and do. So that's it from me. I would like now to invite Madam Wanja Wangondu to welcome her team and to take us through the content of today's forum. Thank you very much, colleagues.
Thank you, Professor, and thank you to our communications and all who have attended the meeting this afternoon. I hope you can hear me. Prof, you can hear? Fine. Unfortunately, I'm using a
Yes, we
desktop.
can hear you.
Thank you. So, Tim, unfortunately, I'm using a desktop that the camera is not so clear that I've not put it on. But I hope you can hear me clearly and we are set to move. Welcome to this training. At the Kenya Revenue Authority, we are here to support you with all your tax concerns and to ensure that you do not have any pain areas on matter how to handle your taxes. So with me is a team of 4 whom I would want they say hi to you. And Lydia, you can say hi to us.
Good afternoon, everyone.
Good afternoon.
Thank you for this opportunity that we are going to share together and enlighten one another in your journey to being tax compliant. Thank you.
Thank you. And Martha, you can say hi to the team. You've been planning a lot with the Toweza communication team.
A very good afternoon, team. I hope I'm audible.
Yes, you are.
Thank you. I am very pleased to be in this session, and I look forward to interactive and a fruitful engagement.
Thank you.
Thank you.
And finally, I want to introduce our first trainer for the day is none other but Mr. Kasim. Mr. Kasim works in the digital tax economy sector. Ed, Mr. Kasim has grown in the authority over a number of years. He is fairly good in taxes, and being an expert in digital service tax, I'm sure that this afternoon he'll be able to answer the concerns that you have been having in relation to this tax. Mr. Kasim, take up the floor, introduce yourself, and let us understand, does the digital service tax apply to us who are in the creative economy? Does it apply to the artists? Or who are these parties that should be paying these taxes? So you may allow Mr. Kasim to share his presentation.
Okay, thank you. I am pleased to be in this meeting. My name is Kasim Mohammed. I am from the digital economy team from KRA. And I am trying to share, unfortunately, I have logged in into two portals. I don't know if you can share, if you can allow me to share on both. Yes, thank you. Maybe just to introduce digital service tax is a new tax that was introduced in, it was introduced via the Finance Act 2019. And it introduced digital income tax, digital service tax to be applicable from the 1st of January 2021. So the regulation that supports the Finance Act 2020 is the Income Tax Digital Service Tax Regulations 2020, which was gazetted sometime in December of last year, and it is applicable to both residents and non-residents. So currently, via the new Finance Act 2021, the income tax, digital service tax for residents in Kenya has been sort of removed. So DST for residents will only apply for beginning January 2021 up to June 30th, that is 2021. So for residents, for purposes of digital service tax, it is only applicable from January 2021 to 30th June 2021. So from July 1st up to the future, until otherwise, there will be no digital service tax for resident individuals and resident companies operating in Kenya. So as you can see, it was charged on the gross transactional value. In the cases of the provision of digital services, the payment received as a consideration for the service is going to be the gross transaction value. And where the use of a marketplace, then the commission or the fee paid to the digital marketplace provider for the use is going to be the gross transaction value of the service. So that is the application of digital service tax. And as I was just said, digital service tax is paid by residents up to June 30th, 2021, and also a non-resident person with without a permanent establishment in Kenya. So a non-resident without a permanent establishment in Kenya will be paying DST as a final tax. But a resident person who is paying or who has paid digital service tax from January will offset the DST at the end of the year by offsetting the income tax payable by that individual or that company from DST will be used to offset the total liability of the income tax for the year. And the scope of digital services is downloadable digital content, downloadable mobile applications, ebooks, films, movies, music, and online games, and over-the-top services, streaming television shows, music, podcast, and any form of digital content. So for residents, if residents have been providing these services between January and June 2021, then they will be subjected to be liable to pay the DST. The other one is the provision of a digital marketplace, a website or an online application. For example, the sharing economy, that is the taxi hailing services. Provisions, these categories both for residents and non-residents. We have non-resident taxi hailing companies already registered for DST, and also resident companies who've been paying between January and June. Then the other one is subscription-based media that offer news, magazines, and journals. And then electronic data management providers such as web hosting, online data warehousing, file sharing, and cloud computing services. These services are also subject to DST, whether provided by a non-resident or a resident in Kenya between January and June. The other one is a provision of a customized search engine services, and then e-booking and e-ticketing services, together with online distance teaching via pre-recorded medium or e-learning or online, including online courses. And then highlights on digital service tax, that is what is the DST? It is payable on income derived or accrued in Kenya from services offered through a digital marketplace. And the rate is 1.5% on the gross transaction value of all digital services. And it came effect on 1st January 2021. And it is payable by both resident and non-resident transacting on the digital marketplace. And I think for purposes of contacting us for maybe a detailed inquiry, I think you can write to us. There's a dedicated team that is handling digital economy related issues. So you can write to us, you can call us anytime at the numbers on your screen. Our email address is digitaleconomy@kra.go.ke. So that's a brief of the presentation on digital services. I've made it brief because maybe I'll get clarifications or questions from your side so that we can maybe shed a light on those questions, and maybe we can also get to learn on the experiences of the digital services providers in Kenya.
Thank you very much. Thank you very much, Kasim. I think before we move to the next presentation, I would like to interact with you a little. And I've also seen, one hand raised. So I want to ask you the question. In presentation, you are saying that the digital service tax was, applies for the period January to June of this year. People are filing, it is for that period. If they are filing or they haven't filed, I don't know what the implications are. So that is the only period until further notice. Is that the case?
Yes. For resident persons operating in Kenya, that is a resident person in a registered person operating in Kenya who is a Kenyan and who has a permanent establishment in Kenya, then that one will be subjected to DST between January 2021 and June 30th. So after 30th, DST is only collected in Kenya from non-resident companies. who do
Very
not
good.
have presence in Kenya.
Very good. So that's very clear. Now I can ask Faith Onea, Gakuru. I think those two, I can see your hands, and then we'll pick it from there. So let's start with Faith and then Alex. And then Deborah.
Thanks, Prof. And thanks for the presentation on the DST. I'd like to seek a clarification on how it will work, like the fine details of how it will work. I know, like, for example, for those either in formal or informal employment, you have tax brackets that if you make a certain amount of money in a month, then this is the pay, for example, that you'll attract. Could you please explain that a little bit to me? Thanks.
I think, Kasim, you can take a set of questions. So let's get Alex and then Deborah, and then maybe Kasim, you can come back after 3 questions.
Thank you very much. Sorry about that. My question refers to online education, online learning, including pre-recorded videos. And I have 2 questions tied to that. Number 1, because a video is recorded and uploaded, does it mean every year for institutions that are not resident and they have those videos which are on our website and they are used to teach, that every year they must pay DST every year? And they made the videos and they have been online, but the courses run every year. That's the first one. The second one, if 2 institutions here offer already a free course that is from an institution that is not resident in Kenya, it's actually Harvard Law School, and they offer these courses for free. Now, do they then have to look for money to pay tax, DST, on these courses which they offer for free because they come from an institution that is not resident in Kenya? So those are the ones I seek clarification for the time being. Thank you very much.
Thank you, Alex. I think those are legitimate questions. Then Alex, you can drop your hands, and then we have Deborah.
Thanks, Prof. Thank you, Kasim, for your presentation. I wanted to find out what the definition of a transaction is, particularly when it comes to places like Facebook and Instagram. When someone, if I had a shop, what will happen is that somebody will like my product and then they will call me, send me the money via M-Pesa, and then I send the goods over. So essentially, it's not like Jumia, where the transaction takes place on the platform. This is a transaction that takes place almost offline. So Facebook and Instagram are used as advertising media, so to speak. So will Facebook now, or will I have to pay DST by virtue of having an Instagram account? Or how does that, what my now that's where my problem is. How do you interpret transaction for purposes of people who are online doing their business, selling jewelry, selling movies, selling songs? How does that apply?
A transaction. I think, Kasim,
Okay.
maybe you can come back.
Thank you for those questions. I think I can take Deborah's question. The third question, the definition of a transaction. Before I go to maybe the question, just to remind you that DST is it's a digital service tax. So the digital service tax is only applicable on services provided, so not goods. So if you have an online platform and it is specifically for just displaying your goods and all that, then those goods then that is not considered as part of the digital service tax scope. So just to make it clear, when someone is selling a physical or a tangible good on the social media, that is the Facebooks and the likes, and there's no commission that that person gets when they are selling that product, then there's no DST to be accounted for there. So let me just maybe make a similar transaction. So where the platform provider is the Facebook. So Facebook is going to maybe look for advertisers or maybe persons on the platform to maybe advertise a certain platform. And then Facebook is going to generate an income from that platform. So that income that is being generated or earned by Facebook, then that income is the one that is going to be subject to digital service tax, because it's a service that is being provided online. So that is the example of a digital service transaction that is subject to digital service tax. I hope that maybe answers your question. If I go to Alex's question, the question of online education learning, where the person is uploading a video, for example, a recorded video that is uploaded every year, where that video is being, it's an old video, but it is earning income every month, every year, then it is going to be subject to tax on all the months and all the years that it is earning income from Kenya. Where that video is uploaded for free, then it is not, where the uploader of that video, whether a resident or non-resident, for the period of time the resident person is liable, then that income is not going to be subject to DST. But if it is earning income, if the person who uploaded the video is earning income from Kenya, is supposed to account for DST. Then the second question is the courses of maybe the schools. You gave the example of the Harvard Law School, where where a Kenyan person accesses a free course from Harvard Law School, then it's free. Then there's no need of paying taxes on free items. But where the Kenyan person pays a small amount to access the materials, then that amount is going to be accounted for by the non-resident for purposes of DST in Kenya. I hope those two questions are clear.
Just
then, answered them very well. Mm-hmm.
Yeah, very well. Just to clarify a little bit, I'm a teacher, but I teach using a course that is provided by Harvard, but I don't charge. So it's not the student. I wanted to show that the institution here which are teaching using resources available from Harvard, and I wanted clarity that is not going to be paid because it's accessible for free from Harvard. I think that's the clarity I got. Thank you.
Okay. Thank you for that clarification. The first question from Faith is on the issue of threshold. Currently, DST doesn't have a threshold, so any income from a minimum of 1 shilling to the ceiling, there's no threshold. So any income that is earned on the digital platforms is subject to DST. Thank you.
Yeah, there is another question that has been asked related to whether Harvard needs to apply for exemption to the extent that its courses are being used in Kenya. But you did say that to the extent that those courses are being offered free, then there is no tax liability, as it were. I think that's what you said. Dorothy Kemunto says she's confused, but she doesn't say what is confusing her. So it's a little. Dorothy, do you want to speak to the challenge that you're having? Dorothy, if you could ask your question, we can unmute you.
Okay. Hello, you can hear me?
Yeah, you can hear you. Please speak a little, speak so that we can hear you.
So my question was, or is, let's say somebody has a blog. The blog is based in Kenya, but they are paying for the domain and they're paying for the blog to be sustained in Kenya. But the payment comes from Google. Are they still eligible to pay?
Problem with, I think there's a problem with her, with your speaker. Are you, can you maybe unplug your earphones? If you are on earphones, maybe that's what's interfering. We can't hear you. At least I can't hear you clearly. I can hear you talk about the blog and so on, but I can't hear the rest.
Okay. Can you hear me now?
This is much better.
Okay, my question was, let's say the way we have Kenyan bloggers, they are blogging about maybe food or lifestyle bloggers or travel bloggers. They pay for their blogs to be sustained. There's an amount that they pay monthly and yearly to have their blogs. Do they still need to pay digital service tax?
I think that's a reasonable question, Kasim. And please do underline the fact that that is for January to June. Maybe Kasim, you can respond to that one.
I didn't get who is the payer and who is receiving the amount.
The blogger pays.
The blogger pays.
Yes.
The blogger is the one in Kenya.
Yes, you're in Kenya, but you have to pay a monthly fee for you to have that blog.
Okay, so what I'm understanding is that fee is going to be subject to DST by the person who is providing that service or that blog. Yes.
So me as a blogger, am I supposed to still pay? So what am I supposed to pay? Because at some point, this blog will bring me money.
Yes.
I will have adverts on the blog, and probably I will earn in a year, I might earn some amount of money. Is that money still going to be taxed? Should I be paying the tax?
Yes. So the question is, if the resident person operating the blog gets income from advertisement.
Yes.
So in this case, it is the income is coming from the non-resident. So if the same income is already taxed by it's already taxed under DST, and the DST has already been taken care of by the non-resident, then the local person is not supposed to account for DST on that income.
Okay. So
yes.
Thank you.
But supposing if Safaricom advertises on my blog because it's very, very popular, so they are already paying DST because so I don't need to pay anything. I think that is Kasim the case as a blogger.
So for the case of residents, there's another angle to it. For example, you've given the case for Safaricom, where Safaricom is going to advertise on your platform. Then Safaricom is supposed to withhold 5%. So where that income is already subject to 5%, then it is also not going to be subject to digital service tax. I hope I'm clear on that.
Yeah, so the withholding tax caters for that. Dorothy, are you better now? I think Alex is saying good. Now that means there's clarity. Dorothy, are you all right now?
I'm okay, thank you.
Thank you, colleagues. Really appreciate this, Kasim. Very, very important. As you can see, this was such an important, opportunity for us to learn. I would like now to take back the second presentation to the KRA team.
Thank you, Professor. Kasim, are you able to enable me to share? It's telling me I cannot start the screen share. Oh, Professor, are you able to?
Yeah, I think our team will be able to do that. Mary, if you can help Wanja screen share.
Okay, so.
Kasim, kindly, yes. You can now share.
Okay, thank you. So, taxation of the creative economy. We want to understand what are these taxes that applies to you. Now, to start with, we have learned that for you who is a resident, with effect from July this year, you are exempted from digital service tax, as Kasim has explained to us, if the given conditions apply. But I want to let us know that does not mean that we are exempted from taxes. That's what we want to see. Are there any other taxes applying to us? So now you realize that the taxes always follow an income. Where there is no income, you will never see a tax there. Tax always follows an income. And so this is the tax cycle. You as a person who is in the extractive or the creative industry, you ought to register as a taxpayer. How do you register? Number one, you get the PIN number. Number two, you get the relevant tax obligations. So somebody is just about to ask me, so in creative sectors, which are my relevant tax obligations? Now, depending on the scope of operation that you're operating at, if you are a small trader, then you can fall under turnover tax. But those ones are very few because they're the ones who do not belong to management and professional and the like. Those are just now the normal parties who are in this industry. But most of us will fall under income tax, as I'll explain, and value-added tax. And then if you have employees, we will have the pay-as-you-earn obligation. So we will talk about this as we move on. I hope to take about 20 minutes, and then we can be able to pick the questions. So after you get the PIN and after you add the relevant tax obligation, depending on your operation level, the next thing that you need to do is ensure you file the returns. Then you pay any taxes that's due. And after that, if there are any matters arising from that, transactions that you've carried out in the given tax period, then you handle the matters to do with your credits. Any refunds that you have, KRA would want to keep your money, apply for your tax refund. If you decide to apply for waiver, you have sufficient reasons for that. It is in order as well. And then the payment of any other pending taxes. But I also wish to clarify that application for waiver does not mean that you will be granted. You must give sufficient reasons to the commissioner as to why you filed your returns late, you did not pay your taxes on time. And it's at the discretion of the commissioner to consider you either 100% partially or to reject your application as well. So what are those types of incomes that are chargeable to tax? Though I know most of us are operating in the creative sector, I also know that when we get our money, we invest in other sectors. And so you'll notice that the Income Tax Act guides us that the incomes that are chargeable to tax include business income from any trade or profession. And you know, a business is termed wide. When you are conducting your creative sector activities and it's not under employment, that is deemed to be business income. Then there are those ones who we belong to this sector, but we are employed. So the income from employment is also taxable. The income from digital marketplace is also taxable, like what Kasim has told us, and he has told us the limit. It's who is chargeable to tax on this income. Then a number of us have invested in commercial residential properties, and we earn the rental income. It's also chargeable to tax. Persons who are employed or persons who save with registered pension schemes, on retirement, they earn the pension income, and that is also taxable. We may also be saving towards, maybe we have SACCOs, and we have shares in SACCOs where we earn dividends, or we save with the fixed, maybe fixed deposits or other tools that pay interest, and we earn investment income. That also becomes one of the incomes that's chargeable to tax. In addition, when we sell our properties, maybe we sell a building, we sell land, we sell shares that are not trading in the stock exchange, then we are required to pay a tax known as capital gains tax, which is at 5% of the gains. So I know somebody's asking, you mean you're saying that if I sell my plot, I need to pay this? Yes, I mean exactly that. That plot, unless it's a house where you have lived in for over 3 years, or it's an agricultural land that's for less than 50 acres, or it's a transfer between spouses or between the immediate family members, or for when you're transferring the property for a deceased person. When you now sell that plot that you bought a few years ago, you are required to determine what is the gain on making that sale. And we determine by the gain by looking at how much have we sold the property with less any cost that we have incurred in making the sale. Then we look at how much did we buy the property at. We add the cost that we incurred to making the property be in the shape that it is at today. Then we less the two to give us the capital gain. And that is the capital gain I'm saying is chargeable to tax at 5%. I know most of us are selling properties, most of us are selling land, most of us are selling buildings, most of us are selling shares. So ensure you take care of the capital gains tax. So now we are in business. We are in the creative economy, and our income is not employment income because somebody has not employed us. And so our business can either be registered as a sole proprietor, where we operate our individual name, where we are operating two of us, that is a partnership. And when we incorporate our business, that's a limited company. So when we operate as individuals, the tax that's charged on it is on the graduated scale rates. That is how individuals pay tax. And then when we operate as a partnership, at the end of the period, the taxable income is shared among the partners, and it's the individual partners who pay tax. And since they are individuals, they pay tax at the graduated scale rates. Where it's a limited company, the resident limited companies will pay tax at 30% of their profits, and the non-resident companies will pay tax at that 7.5% of their taxable profits or incomes. Now, some of us ask, what is chargeable to tax when it comes to business income? It is what you have earned from Kenya. It's also if you are carrying business partly in Kenya and partly outside Kenya, and this applies to most of us who are in creative sector, then what we get in Kenya and outside Kenya becomes taxable in Kenya. And as long as we can pinpoint and say that the gains or the profits that you have been accrued or been derived in Kenya, as long as there's that evidence. Now, in addition, let me note, the law continues to tell us that for persons in employment and for persons who offer services, then the two, if you earn your income from employment or from the services that you render, and this is common to you parties who are in the creative sector, you are required to declare your worldwide income. What that means, when you do your activity in Kenya, when you also have another activity in Dubai and another one in US, come the end of the year, you are supposed to bring in all these incomes together. I know somebody's about to stop me and ask, when I did my activity in US, I was charged taxes there. Then are you saying I'll pay tax twice? Now, realize this. If you are operating as a sole proprietor, that is as an individual, all the taxes that you will pay in the various countries, you'll be allowed to less that tax. So you'll declare all your incomes and less the given taxes that you have been charged in the respective countries. Now, I believe that's quite easy for us. When it is a limited company and the like now, you notice only where there are double taxation agreements, the lower tax rate will apply. So, and how do we pay tax at the business income or at the income tax? So what happens is we pay the taxes in installments. The law says if the taxes that we are supposed to pay in a given year is 40,000 or more, then we will pay that tax in installments. But if it's less than 40,000 in a year, then it's in order to pay it once in a year. But for business people, it's advisable for you to pay it in installments. Then come the end of the year, you file the annual return, but ensure you pay the taxes in the course of the year. Your main obligation, as we have said, is income tax. Income tax is your main obligation. So now, I know some of us are operating at a level that we have employed people. When you employ persons and you pay them anything above 24,000 in a month, even if you are the one earning that salary, and if it's a limited company, or in case it's the issue to do with you have an employee who earn more than 24,000, then you are required to get the pay as you earn obligation. Now, who gets the pay as you earn obligation? It is both the residents and non-residents. The key thing here is you are an employer. And who is an employer? An employer is someone who has the right to hire, to fire, and to pay remuneration. So if you have those three rights, you have the right to fire, to hire, and to pay remuneration, then you are the person we are talking about. And for pay-as-you-earn purposes, the incomes that are chargeable to tax would include the wages that you pay the employees, the salaries that you pay them, the benefits, like when they go on leave, you may be giving them leave pay. In addition to these, you may be giving them allowances like house allowance, transport allowance. Others, you may be giving them airtime and the like. So I advise all our taxpayers, if you know you have employees, it is advisable for you to download the Pay As You Earn guide. All contact us so that we be able to explain to you in detail. But ideally, all the gains and benefits that you are getting from employment are taxable except for 5 of them. And the 5 of them that are not taxable include when you get a meal, when you give your employees meals, the staff meals, as long as the staff meals do not exceed, as long as the staff meals are up to 4,000, that's tax free. But when the meals go beyond 4,000 in a month, what is in excess of 4,000 becomes taxable. Then, if you are saving towards a pension scheme, what the employer is contributing on the behalf of the employee, if the employer is one who pays tax, that's not taxable on the employee. There are the cases where the employer have medical cover and medical insurances for all the employees, that's also not taxable. And when you have engaged an expatriate, and that expatriate, you pay cost of passages on them. Like you have employed somebody from outside Kenya who came purely for the business of that you have employed them for. Then when you pay for them cost to go back to the country like once in a year, that will also not be taxable. But if you have any more queries in relation to the people you have employed, put it on the chat so that I may be able just to address the concern directly. But note, if you have employed anyone and you pay them 24,000 or above 24,000, you must have the pay as you earn obligation. And when you get the pay as you earn obligation, you file the returns every month. The other tax that would apply to us is withholding tax. Now, this is where we offer management, professional training, contractual, legal fees, audit fees, and the like. When we have offered a service, the person that we offer the service to deducts us the withholding tax. And when people offer us this service, like what we talked about, the management, the professional, or the training fee, or the contractual fee, the legal fee, the audit fee, in the creative industry, I know a number of us, in fact, creative sector, we have the professionals. So when we offer a service somewhere, we are deducted 5% if it's to a resident person. So note that. And then once the 5% is deducted, come the end of the year, we will be able to declare all our incomes. And upon declaring all our incomes, whatever was deducted in the course of the year in form of withholding taxes, we will less that. So when you are the one making this payment, ensure you deduct, because I know, like in creative industry, an artist can contact another artist to do for them an assignment. When you contact another artist to do for you a given assignment, deduct the 5% withholding tax. Remember to do that. And everything that you have deducted in the given month, you'll emit that on or before the 20th of the following month. Now, turnover tax does not apply to us because we are professionals. But I have said, I know some of us would be in the creative sector, but we have small businesses. So this is for the small businesses, not separate from the management or the professional line of operation that we are having. So if we have these other side hustles or small businesses and our turnover falls between 1 million to 50 million, that's when we register with turnover tax. And you notice when you pay turnover tax which is at 1% of the sales, you do not pay any other income tax on the given business. But if the business, you are dealing with fattable goods and services, then, and the turnover is above 5 million, you'll be required to register with value-added tax. But I'll mention the value-added tax in before we end. So for that small business, ensure you deduct 1% of your gross sales and you'll emit it on or before the 20th of the following month. So as you can see, among the exemptions of turnover tax is management or professional or training fee. And new parties who are in the creative sector, that is a professional fee, so you are exempted. Now, in relation to value-added tax, the service that you offer in the creative sector, it's fattable, meaning it attracts value-added tax. What this means is that if your turnover is 5 million or more, or if your expected turnover is 5 million, you are required to register with the value-added tax obligation. And when you register with the value-added tax obligation, you do this registration on iTax. Initially, we used to issue VAT certificates, but right now, all you need to do is add the VAT obligation on your PIN certificate. And then you file these returns every month. And upon filing the returns, you make the payment that ought to be paid. Now, one thing that I want us to know is that once we get the various tax obligations, let's ensure we file the returns. For the annual returns, that's the income tax returns, income tax partnership, and income tax company, we file the returns once in a year. For pay as you earn, we file the returns every month, on or before the 9th of the following month. For the excise and for the VAT, we file the returns every month, on or before the 20th of the following month. And if you file your returns late, there will be a penalty. And look at it this way. If you filed your returns on time, you save on what I'm about to tell you. Now, if you fail to keep the proper records that you're required to keep, you get penalized by a 10% of the tax that's due, or 100,000, whichever is higher. And then if you file your pay-as-you-earn returns late, it attracts a penalty of 25% of the tax that's due, or 10,000, or Kenya shillings 10,000, whichever is higher. For your small businesses, if you file your turnover tax returns late, which is now monthly return, it attracts a penalty of 1,000. And for the other returns that relate to individuals, like the rental income returns, like the income tax for individuals, the penalty for late filing is 5% of the tax that's due, all 2,000. And for the corporate and partnerships, the penalty is 5% of the tax due, or 20,000. And any tax that remains unpaid after the due date attracts a late payment penalty of 5%. And in addition, an interest of 1% per month. Just look at it this way. I know you are people in creative sector. You can already visualize how much saving you will make by ensuring you file your returns on time and you pay the taxes that you're required to. Now, in addition, I know a number of us have been desiring to get tax compliance certificates because we need them for our businesses. And so, at what condition does the taxman give the tax compliance certificate? Remember, you apply for tax compliance certificates online on the iTax platform. And you may need the certificate mainly when you are tendering all for the business and the like. So as long as you have filed the returns you're supposed to file and paid the taxes that you're required to pay, then the taxman, the system will automatically issue you with the tax compliance certificate. But if that has not been done, then my dear colleagues from the creative sector, what then you do, you visit your tax service office. By the way, when you're applying in iTax, it will tell you if you have any debts. And then what you're required to do is clear those debts and you automatically get the certificate. But if you do not have the full money, the taxman recognizes that sometimes you may not have got a job and you want to get a clearance, the tax compliance certificate so that you can secure that job. And in that case, what you do, you visit your tax service office and you agree on a payment plan. And that way you'll be issued with a compliance certificate as you proceed handling your payments. So do not hold your heart and sit back and say, I do not have a tax compliance certificate and so I'm not getting businesses. The taxman is here to facilitate you and to facilitate businesses. In fact, trade facilitation is one of our key mandates. Now, I also want to bring to our attention a program that's running from January this year to December 2023. It's called the Voluntary Tax Disclosure Program. I know a number of us are saying there's a tax that I did not pay in a given period, and I don't know what I can do because the taxman may get to know about it. Imagine the taxman also believes in second chance. And so a second chance has been given to you through the voluntary tax disclosure program. And what this program is basically saying, are you there and you did not declare your income in a given period? Come out now and declare it. Imagine if you declare it in the year 2021, you will get 100% waiver on the interest and penalties. If you declare it in the year 2022, you will get 50%. If you declare it in the year 2023, you shall get 25% waiver on the interest and penalties. So please do the declaration now. The only thing I wish to note, for any taxes that's undergoing audit, for any tax that obligations that you are undergoing audit or investigation, or there's a case that's in court in relation to a given tax, that one you'll not be able to qualify for the voluntary tax disclosure. But that income that you did not declare or you have not declared from July 2015 to date, make the point of doing that declaration. Make the point of doing that declaration now. So I wish to bring to our attention that if you want to declare something that you had not declared through the voluntary tax disclosure program, now you handle this on iTax platform. Go under returns and you'll see voluntary tax disclosure and do the declaration. And kindly ensure you do a proper declaration, because if you fail to do a proper declaration, that is, if you fail to declare the income as it is, and the commissioner has word about it, the commissioner will withdraw the relief that will have been granted on you and assess you and collect any tax liability that's remaining. The commissioner can as well prosecute you. So let's not get into such steps. Let's pay the taxes. Let's take advantage of this voluntary tax disclosure. And now we have the M-Service app. You can in fact pay the turnover tax, the rental income, get your PIN, file for the turnover tax returns and rental income returns through the iTax platform. In fact, you can even confirm that the PIN, the payment slip and the tax compliance certificate that you have is valid on the M-Service app. Just go to your app store and download the KRA M-Service app and you will be good to go once you download that. And then the last thing that I wish to bring to our attention is that the taxman is fighting corruption from all angles. And this is the corruption reporting line 0726 984 668. If you wish to report any corruption activity, please feel free to report it to corruptionreporting@kra.go.ke. Report it to that number, report it to that number. A number of things are happening at the tax authority. There's a lot of lifestyle audits, vetting for staff, as well as any taxpayer who would be evading tax, so do not be caught into that. And also we have the informal reward system that I wish to bring to our attention. If you know someone who is evading given tax, feel free to report them and you will receive up to 5% of the taxes that will be recovered up to a maximum of 5 million. So ensure you do any reporting that's necessary. So I've come to the end of my presentation, and if you wish to get more information about any given tax, you may ask the question now, or you may feel free to write to us to call center at kra.go.ke, or you may call us on 0711 099 999. Feel free to contact us at any time. So maybe, Professor, at this point, I may handle the questions that if we have any that have been asked.
Yes, thank you very much. Thank you very much, Madam Wanja. For a moment, I thought you were going to say the tax lady instead of the tax man, because thanks very, very exciting presentation. I have seen a number of questions on chat, so I can read one or two, but I'm sure that other people will be raising their hands. But there is one question which I would like you to reflect on, but I mean, I don't think you need to answer today. There is a question that was sent to me directly, and that question relates to the fact that Kenyans pay a lot of taxes, work very hard. You taxes, but does KRA have an obligation taxes that Kenyans pay by those who are charged with managing public resources? So that was a question that was sent to me directly, and I thought maybe I should ask it because it's a whole question of accountability of public resources coming from us as Kenyans paying taxes, and whether within the mandate of the Kenya Revenue Authority you have that there is that opportunity to support the public in the use of their taxes. So you'll come back to that question, but I have seen a number, and one, let me read this one, which I think is also a very important one. So the question is, so someone has a home office or studio, and because they are using the home, that little corner, to make some money, and they have rented the apartment. Is the rent and expenses allowable income when they are declaring, because they're also working? Is that allowable? Rather, are they allowable expenses? So there is that question of the whole question of home office, which has come as a result of especially COVID. And I think that there is another question which relates to, and for the avoidance of doubt, I recognize, understand, and support government tax collection efforts because it's taxes that develop our country. Civil society exists to complement government's development and so forth and so on. I think that is a consequence of a question of whether donor projects, the grants that civil society organizations get, qualify as income, and therefore are they taxable. So for instance, if you get say 100,000 shillings as a grant to do public work, is that taxable? Is that viewed as taxable? And especially because the civil society where they are receiving money are also complementing government work in terms of developing the country. Then there is a question which I think Kasim can come back to respond if need be. So if Facebook pays 1.5%, will it also withhold an additional 5%, making the total amount withheld as 6.5%, or will the 5% cover the digital service tax as well? So so how do you navigate the 1.5% and the 5% withholding tax so that this individual is not overtaxed? I think those are the questions that I can see. But if there are additional, people can raise their hands. But maybe Madam Wanja, you can respond to those ones.
Thank you. Thank you. But even before I go to the questions, there's one last slide that I ought to have shared about the exemption. Some people had asked,
yes,
for the entities that deal with charitable work, what is the window in relation to exemption from taxes? Let me bring to our attention that the law specifically says that if you are dealing with, or if your business is dealing with activities that enhance or advance education or religion or relieve poverty among the people, and your entity is of public character. What this means is not an entity that if it was closed today, the money goes back to your pocket. Then you qualify for an application. You can apply for income tax exemption, and upon the taxman looking at your account or looking at your application, then the taxman, if you qualify, the taxman will grant the income tax exemption. And once you get the income tax exemption, all the incomes that relate to income tax, like the business for that given entity, maybe there is business income, maybe there is the capital gains tax, there's rental income, you'll be exempted from tax for such incomes. So I highly encourage entities that would be dealing with that is advancing religion, advancing education, and relieving poverty. Feel free to apply for the income tax exemption. The application for income tax exemption is online. And once you make the application online and you attach the required documents, then the officer will contact you if there's any more information that's needed. And after the case is considered, you will be issued with the income tax exemption certificate. Now, in addition, for the persons living with disability, we also have the income tax exemption for them, where the first Kenya shillings 150,000 per month of their income is exempted from income tax. So if you have employees who are persons living with disability, then let them enjoy that that exemption that is there for them. And they will be required to visit the Association of Persons Living with Disability. And it's from that place that everything is handled, and finally the exemption certificate is issued. In fact, you don't even visit any KLA office. You just visit, you liaise with the Association of Persons Living with Disability. So I go to the questions. The first question is about the use of taxes. Yeah, indeed, I agree that it is a pain when you know that you have given all your money and you hear in the news that some money has been misappropriated. And so, what is the taxman doing about this? The taxman is calling upon Parliament. In fact, it's one of the talks that our management keeps on telling Treasury to push for, because we want the money that we actually collect to be used properly. Else, the people who end up paying the taxes may get demoralized if they notice that all they are paying is not used properly. But I'm happy to report, at least, dear Kenyans, you have seen the kind of developments that are there in our country. And all this is because of that 1 shilling that you paid. The other question is about this person who is doing their business from their home, and their studio occupies part of their home. And so the question is, can they allow as a rent expense that part? Yes, for professionals, I want to bring to our attention that even uniforms that we use, it's an allowable expense. Even if when we use our private vehicle for business and for private purposes, as long as we can bring out the apportionment of what is for business, it is also allowable. In the use of the house, if it's the house that we occupy and we use for business, as long as we are able to apportion what is properly for business, it is allowable. But don't allow the whole house. That's the bottom line. In addition to that, there's another question that somebody is asking: donor projects, do they qualify as income? Now, I want to let us know that donations given in cash to institutions that are exempt from income tax are allowable expenses. Donations given in cash to institutions that are exempt from income tax are allowable. Those ones are allowable. Now let's talk about donor-funded projects. For donor-funded projects, and the entity is not exempt from tax unless we seek specific exemption from Treasury. That's when it will be exempt, but else it will be taxable. Thank you. Those are the questions that applied to me. Maybe Kasim, you can handle yours.
Kasim. Maybe as Kasim comes in, there was a question which I think you have answered, but which I would like to ask again. So there are certain organizations that sub-grant. So, for example, you are set up to, you get resources, then you give those resources to smaller organizations so they can do poverty alleviation programming somewhere in Turkana or in Kunyak. So is the donor, so you are basically a financial intermediary, but you are a public entity in a sense, a public entity in the sense of you exist not for profit, but basically to be able to serve the public. Are those type of grants also subject to taxation?
So thank you.
Intermediating, yeah.
Now we look at the party receiving the donations. If the party that's receiving the donation is exempt from income tax, and you give the donation in monetary terms to such an entity, then that is when it will become exempt. So the party receiving, for that donation to be an allowable expense, the party receiving ought to be exempt from income tax and to be having a valid exemption certificate. So when we talk about donations, we do not look at them from the point of the giver, 100%. The point of the giver, we look at it, is it being given in monetary terms? But the point of the receiver is the main part. whereby we look into, is that receiver exempt from income tax? So I hope that is clear, Prof. So the receiver, is the receiver exempt from income tax? And is the giver giving in monetary terms? So when the two agree, that is an allowable expense.
But, I think that is clear to me. I'm hoping that it's also clear to Peter, who had sent that question, I think yesterday or day before yesterday. I know, Martin, you're having trouble with audio wherever you are, but I think that the audio is good. Most likely the problem is on your side, not on our side. I think it's a problem, so you might want to log out and then log back in, Martin, if that works for you. Is Kasim back? Because there was a question about the 5% withholding tax and 1.5%, and whether the person who is providing the service is not being taxed. Like,
Kasim, are you there? Let me see.
okay, he may have left. Is there any other presentation, Madam Chair?
No, we do not have any other
Okay.
presentation,
Okay.
but
Okay.
let me handle that question.
Yes,
So
thanks.
the question is the digital service tax. This one, we have seen that the digital service tax is applying to the non-residents only with effect from 1st of July 2021. So if you are a resident, then you'll be income tax or the VAT aspect. And so the question being the aspect of the withholding tax. So for you who is a resident, you'll just be charged the withholding tax at 5%. So now let's look at this person who is a non-resident. So when you offer professional or management fee for non-residents, the withholding tax is at 20%. And that one is exempted from if the professional fee. I can see Susie Kamande can actually confirm. Susie, you want to? Oh, I've seen she's here. Susie, you want to proceed or I finalize on it? Okay, Susie, I can see she's here. Okay, fine. So let me just finalize on it. So when you get deducted the 20% withholding income tax, that is to the non-resident person, that is a withholding tax which is final. You do not get charged any other income taxes. You'll not be charged digital service tax, and neither will you also be charged income tax. That 20% withholding tax becomes a final tax to the non-residents. So I hope that brings out the total difference. So initially, between January and July, the residents were having the both taxes, that is the DST and the withholding tax. But right now, that's not the case. For the residents, you'll only suffer the withholding tax. You will not suffer the digital service tax. And for the non-resident who is offering the professional, they'll only suffer the withholding tax. They will not suffer the digital service tax. I hope that's clear.
That is very clear. I think I can see a question from Michael on the minimum amount that is not taxable under DST. And I remember Kasim saying that there is no threshold in response to the question by Faith. So
indeed, Fluff, as you have said, there is no minimum amount for DST. There's no minimum amount. So any amount that you are earning from offering a service on the digital service platforms to the non-residents, it's taxable in full, any amount. Yes.
Yeah, and again, to reiterate that the DST was operational between January and June 30th of this year for residents.
Yes.
Yeah, so in other words, the point of suffering, the tax lady is January to June 30th with regard to DSTV for residents. That's correct, right?
Yes, yes, it is. You sound like a tax man, Prof.
No, I'm learning. It's because of this training. I can assure you, this is my first learning, in a real training on this matter.
Wow.
So
then it means the concept is sinking well. I'm happy.
yeah, it's sinking. I can see a question from Washuka. Washuka is asking, DST, the digital service tax, is taxable for services offered to non-residents. Is this correct? Do you want to answer the question whether DST
Washuka
is taxable for services?
DST is taxable for services offered to non-residents. Now, Washuka, notice this. Yes, the services that are offered, this non-resident is earning an income. Hold on. Who is earning an income here? That's the key thing that we want to see.
It's the non-resident.
If you offer the non, okay, DST is taxable for services offered to non-resident. No, the non-resident is not earning an income here. Look at it that way. You see, tax is where there is an income. So DST is taxable for services offered to non-residents. So where is the income here? Who is earning the income? Because digital service tax arises whereby somebody earns an income by offering a service on the digital platforms. And so DST is taxable. This is quite tricky. Okay, let me, Susie, are you there? Susie, I would like you to, because this question, this is Susie Kamande, are you there? I want you to take this because it's not clear to me because I can't see the income that this person is earning. Susie? Yes. Kasim, Kasim is back. Take up your question, Kasim. Welcome. Kasim, take up the question.
If you can repeat the question, please.
The question is, Luca is asking, it's in the chat, is DST taxable for, is applicable rather, is DST applicable to non-residents? So if Washuka, for example, earns some money for the services that she has given, say, to Richard Stewart based in Austria, she gets to pay, and this is digital. Is that the question? That's the question, Angela. Or unless, why don't you articulate it, Angela, and Washuka, yourself? Why don't you ask the question yourself, please? We can unmute you.
I just thought that at the tail end of the presentation that she just gave, she mentioned it being applicable only to non-residents or something. So maybe can she please clarify if there's a distinction between non-residents and residents when it comes to DST? Because in any case, like Alex has pointed out, it's digital, so it could be to anyone, anywhere.
Now.
Kasim, you got it?
Yes. If I understood the question correctly.
Yes.
A non-resident is the person receiving the service. So the service is being provided by a Kenyan. So if the service is being provided by the resident, if the service is the payment is coming from resident and it's going to a non-resident, then the non-resident is going to be subject to the DST.
Okay.
Yes, but then if it is vice versa, if the service is being provided by the Kenyan to the non-resident, then it's going to be subject to withholding tax.
Okay.
Yes, so at the rates of non-resident persons.
Okay.
I hope that clarifies the question.
I'm not sure that it does. Washuka, does it clarify?
Perhaps it could be a bit more clear. So let me give you a quick example. And sorry to take up everyone's time with this. I just want to understand this clearly. So let's say I am running a literary festival that is digital, and someone is participating from America, and there's a speaking fee attached to that. Are you then saying that the payment I pay them should have a 5% withholding tax as DST? I'm not sure that I understood.
And further, to add that so that maybe we get a better answer, what if the payment the person is paying me in Kenya so that then they can speak? So who pays what where?
Yeah.
And also the same for another speaker who is in Kenya and I'm running it from Kenya.
Yes, I think I got the question. So the conference is organized in Kenya. Correct. And then there's a payment that is made to the Kenyan person from America.
Let's say from correct? The Kenyan person to a person in Kenya and another person elsewhere, so that we get the distinction between resident and non-resident.
No, let me ask. So who is providing this conference?
The Kenyan-based entity.
The Kenyan-based entity. So the Kenyan-based entity is offering a digital service in this case.
Yeah.
So there are participants from around the world who are paying Kenya, and they are paying the Kenyan entity.
No, let's say the Kenyan entity is giving them a fee to participate, for instance.
In fact, give us a case for both scenarios where Kenyan is receiving and the Kenyan is paying. Thank you.
So the income is being earned in Kenya. So the person who's earning the income in Kenya is going to subject the income to digital service tax. So in the case where the conference is being offered by the conference provider is a non-resident, then the non-resident entity is going to be pay DST, is going to be accounting for DST. So that's the first distinction. So the second distinction is the person who's making the payment. If the conference is being provided for an non-resident and a person in Kenya is attending that conference, only the income that is being generated by the Kenyan is going to be accounted for by the non-resident.
Kasim,
yes.
let us put names to this, okay?
Okay.
So, an event, Korir is a Kenyan. They have organized an online event, and Korir has resources to pay Smith a certain amount of money, and also a certain amount of money. So for Munywa, he will do withholding tax because Munywa
come again.
I
think your line is not so clear. Come again.
So I was saying that Korir is a Mr. Munywa.
Yes.
Mr. Munywa is based in Kenya. When he gets paid, you will do 5% withholding tax for Munywa. So it's clear.
Okay.
So, but now you also have a Mr. Smith,
who is a non-resident.
He's non-resident. And
okay.
Smith, what do you do?
I didn't get the last part.
What do you do with Mr. Smith?
Where the payment is going to Mr. Smith.
Yeah.
Okay. So the service that is being provided here is, number one, a professional service. It's a management service.
Yes, professional.
Professional. So then in this case, then Korir is going to withhold on the payment to Smith.
Okay. At what percentage?
at the non-resident percentage. So it depends where the Mr. Smith is. So if it's a non-resident, there are different rates for non-resident. So if it's the ESC, I think it's 15%. I think Wanja, you can confirm for us on the rates. So there's another rate that is 20% for management and professional fees. So that depends on which country and where the payment is going. So depending on the country where the payment is going, there are different rates to that effect.
So Washuka, does that help answer the question in a clearer way?
It makes me more stressed, but yes, I understand. Thank you.
Okay, maybe you can come
I
back
understand that.
with the question. Maybe a
Can I
clear
just
example
add?
will maybe get clarity on the question.
No, I
Can I
understand
now
what
to
you're
just
saying.
ask a curious?
Go on, please.
Shuka, continue.
Question.
I said, thank you, Prof. I think I understand. I understand what he's saying in terms of taxes. It doesn't make me happier, but I understand it. Thank you.
Yeah, it is always a challenge. It's really always a challenge, and I know that writers who also work under the creative, contribute the creative industries. For example, if you are published, for example, in Europe, you are subjected to tax on any royalties that you earn, and then you are also subjected to tax here. So I think that the explanation that I also got was that you would need to indicate that you paid taxes elsewhere. I know that that's a question that you've on for quite a while, and maybe we need to find a way of responding to her question. She's not in the room. I know that she's been asking this question consistently. Why she ends up paying double taxes? She pays taxes for books published abroad, and then she's also taxed here, and whether there's something that can be done. I think that it's to indicate that tax was paid elsewhere, and therefore
Yes.
seek for exemption. Yeah, isn't it?
Yes. Actually, I wanted to go that direction, but I saw that maybe I'll digress. So where the income is going to be maybe earned by two parties which are resident in countries where there is a DTA, then there is supposed to be an offsetting or a credit that is to be done by one of the countries. So in cases where there is a DTA between, in this case, there's a DTA between, for example, the UK and Kenya, then that income is supposed to be netted off at some point. So where the credit is supposed to be, where the income is not supposed to be taxed twice. But in some instances now, if the income is already declared and taxed under UK, and then the same income is taxed under the withholding tax, then it will be netted off, so that it appears that it has not been taxed. So those are the explanations that if we start going into those discussions, I think we might get there. The whole question of DST, withholding tax on professional and management and all that, we might start getting that part clear.
Yeah, and for general information, the DTA is basically the digital tax agreement. So that because Kenya has a digital tax agreement with some countries. That's correct, Kasim, right?
Oh, not really.
Uh-huh.
We have a double tax agreement with some countries where DST is part of the taxes that is contained in those agreements.
Okay, I got it.
Yes. So other than DST, there's also income tax withholding tax, and so on and so forth. So basically income tax related taxes.
Okay, so this is very useful. And again, to just reiterate that the DST applies for the period January to June 2021, June 30th, 2021 for residents. that is basically Kenyans, and I think all of us in this platform are. And then from there, it's basically the other taxes that we pay, but it continues to be operational for non-residents, because I can see people are all, still thinking that they will be paying DST, and I know that they are Kenyans. This is correct, right? Good. I think Kasim, you got me on that one. The last comment I made, right?
Yes,
because
yes,
I can see some of my people are wondering.
Yes, if I got your question right, your comment right, it's basically non-residents. DST is only applicable to non-residents from July 2021 to the current time. Residents,
no way I can launch without you asking.
DST is applicable to residents from January 2021 to 30th June 2021. I think you're right up to there.
Okay, that's good, because some people joined late, so they missed your part of your presentation, and that's why I can see some people were not still sure whether they need to worry going forward. I think they need to worry for that period, January to end of June.
Your earlier suggestion was
Come again? Is someone asking a question?
Professor?
Yes.
This is Lydia. I wanted Kasim to bring out something clear. I think based on the question that Washuka raised, it brought out two service levels. Washuka has organized this conference online. The question is, the platform she's using, does it belong to a resident or a non-resident? That distinction needs to come out clear so that they don't confuse the double taxation for the other withholding income tax. So probably you could approach with that angle when answering her question. Kasim, please.
Kasim will need to unmute.
Even as we wait for Kasim, I also want to clarify something. In taxation, we do not talk about Kenyans or non-Kenyans, but in taxation, we talk about a resident or a non-resident. So who is a resident? A resident is anyone who has a permanent home in Kenya and was present in Kenya for any period of time. Number two, if you do not have a permanent home in Kenya, you are present in the country for 183 or more days in the given year. So those are the two main scenarios that we look at in determining a resident. So it's not about being a Kenyan or not. There are very many people who would be Kenyan, but they do not, and even they have homes here, but they do not visit the country for a given number of years. So they will be non-resident for tax purposes.
A follow-up question. Thank you very much for that. Facebook, supposing this is a case, supposing Facebook has an office in Kenya, and Facebook, of course, we know it's incorporated in America. Is Facebook local, a resident, or is it non-resident and it's a legal person?
Okay, so the first scenario I've given is for an individual. Now let's look at non-individuals. When do we say an individual is a resident entity? Number one, if it is registered under any laws in Kenya. Number two, if the control and management of that entity takes place in Kenya. And the third one is if the cabinet secretary has declared the given entity to be a resident. So that is how we determine who a resident is.
Yeah.
Okay, it's complicated. I rest my case, but thank you for the explanation. Thank you.
Thanks, Alex. I think there is a question from Corey, and we are still hoping that to Kasim to come back would also be useful. Corey, if you can step in.
Hello. So I feel like there are other avenues that have not been highlighted on what tax is supposed to be to pay. For example, affiliate marketing. Considering if you're affiliate marketing for e-commerce such as Jumia, are you subjected to more tax or have they already been taxed? Or what does a YouTuber pay since Google is already being taxed DST? Do they pay income tax? Do they pay withholding tax? What are they supposed to pay? And also there's these other like Instagram pages or influencers. So you pay them maybe 500 bob to advertise maybe your product, maybe shoes. Are they supposed to pay tax, or since they're on Instagram, which is already being taxed? How does that work? And what about these jobs online that are considered illegal, such as academic writing? Are they taxed such as well? Like, are they subject to any kind of tax? And my last is, can KRA consider depression a form of disability, considering that creatives are affected by mental illness a lot, and it affects your ability to work? Thank you.
Good set of questions. Can we get Wanja, do you want to respond to that, or who is going to respond to Corey's questions?
Maybe I can just try to answer the question. Let me give an example, because the platforms that Kenyans are using online, the big platforms that are generating income for creatives in Kenya are known. So the likes of Facebook, the likes of Google, the likes of I can say maybe Twitter, Instagram, and the likes. So maybe we can give examples to try to explain a scenario where DST is applicable. So this is where I need to give an example where a resident person is, for example, on Google. And I'll give the example of maybe, for example, a premium service, for example, advertising on Google. So Google will be advertising to targeted users in Kenya via the local creatives on the platform of Google. So number one, Facebook will get audience, or YouTube is going to get audience on advertisers who are trying to target the market. So number one, the income that is going to be subject to DST is going to be on two levels. Number one, there's income that is going to be generated by the Kenyan user or the Kenyan creative, and that income is going to be earned by Facebook, Google, and the likes, the non-residents. So that income is going to be subject to digital service tax. So the digital service tax is going to be paid by the non-resident, that is the Facebook, the Google, and the likes. So up to there, I think we're okay. Then number two, there is the income that is going to be generated, or the advertisements are going to be. I don't want to use the wrong word. The advertisers are going to appear on the creatives platform or the creatives online space, where the creative is going to earn an income, and the income is not going to be from. It's going to be, the income is going to be coming from a resident person who is making the audience, or is trying to get the audience to channel the audience to the creatives platform. So in this case, the person who is going to be given, who is going to earn the income is the person who is the advertiser. So the advertiser is going to get a share of the income. So when the advertiser is getting that income, then the person who is paying is going to be required to do a withholding of that income. So where there is no withholding, where the income is not withheld, then DST is going to kick in. I don't know if we are clear up to there.
I'm requesting,
yes,
maybe in a future meeting to have like a clear stipulation for what if you're a YouTuber, this is what you pay. If you're an affiliate marketer, this is what you pay. So that it's so clear and you know what percentage you're paying. And then also, how do I pay? And how, do I send an M-Pesa screenshot? Do I note an M-Pesa code so that you know you're compliant? And
okay.
So how do you submit that as well? How often? So that we just have a clear direction of what am I supposed to pay? How do I pay it?
Okay. I think you're right. If maybe for a specific maybe inquiry, maybe you can write to us, because I know DST is a new tax. Not so many guys are conversant with the level of compliance and what they're supposed to be required to do here and there. So I for sure I can tell you that currently KRA is still looking for compliance to net the people who are actually trading online and they're not able to comply. So it's good that maybe the taxpayers, the public comes and writes communicates to KRA and gets a clear clarification on their business model. Maybe your business model is exempt, but until maybe you get a clarity from the KRA, then that's when you are going to be satisfied that this is a business that I already know the taxes that are involved in and whether I'm supposed to pay this much tax and this and this. So until then, we're just going to maybe give a broader view of the compliance, and it's going to be also difficult for us to actually pinpoint the issue because we have these requests coming in every day regarding on the clarity of a digital service tax and the scope that is supposed to be chargeable for DST.
So can you please?
Yes.
Can I please give just 2 examples for now? Affiliate marketing and academic writing.
I think that the question that Corey is asking, maybe because it's very deep, I suggest that Corey, you can, we can find a way of reaching you and getting to and so that your question is handled in a very direct way, because I can see that Kasim is not, unless Kasim, you want to go deeper into the question by Corey, or would you rather handle this particular matter directly?
Thank you. I think the issue of affiliate marketing, I think, is part of advertising, or it's an advertising. It's a way of advertising on the digital platforms. So that's what I'm saying. If the affiliate marketing is done by a resident person, then the affiliate, the income is going to be subject to Kenyan taxes. So number one, the income is going to be subject to income tax, company, if it's a company, or income tax individual, resident, if it's a resident. Then number two, if the income is earned online between the periods of January and June, then that income is going to be subject to the regulations of the DST, where the resident person is going to be required to account for DST between the periods of January 2021 to June 2021. So the conversation, I think, is whether the affiliate marketing and academic writing is part of the DST scope. Then if these incomes are earned on a digital platform, then they are supposed to be subject to DST. Now the issue comes in where if they are supposed to be subject to DST, who is the payer of DST? Where there is an income that is earned by, where the income is shared, because there is a platform provider who earns an income, and then there is the service provider on that platform also earns an income. Then the income is going to be subject to DST on the platform provider. So the income is going to be the DST is going to be charged on the income of the commission that is charged by the platform provider. Then the resident is going to be required to account for that income in the local resident framework. That is the income tax framework in Kenya. Yes. I don't know if I have answered your question up to there.
I feel like that's double taxation, but maybe I can contact you later because Jumia is already being taxed, and yes. I'm almost like a work of Jumia, so they are paying taxes. So I'm just almost like advertising their website, and they're being taxed DST. So I'm also going to be taxed again for income tax, 30%. Maybe that's double taxation, but I don't know. But could you please answer about the depression being regarded as a disability?
Thank
Prof,
you.
if I could just ask the
I
answer.
can see there are a number of questions. I can see there are a number of questions coming up. I can see Alex and I can see Domi. I would like to, so that we are also moving forward. Even as you reflect on mental health and neurological disability, so that we are also talking about neurological disability. Maybe we ask Domi to ask her question briefly, and then Alex, and then we really should be wrapping this one up because for the sake of our own mental health. So maybe you can respond. Yeah.
Yes, you're right, Professor Kimani. Actually, and I'd like to really congratulate the creative economy for setting up this meeting. It's been quite informative, even though I would say I'm still a little bit confused about a lot of things. But what I'm going to say, working in the nonprofit sector and pushing for positive changes to improve our situations as Kenyans, especially now in this case, the creative economy. I think setting up tax regimes only purely for the purposes of collecting tax, and I think that is a noble objective because, I mean, in a good case scenario, generally, our taxes are supposed to make our lives better, build our roads, make sure not too many people are dying from COVID because the hospitals are not functional or stuff like that. But we know that the situation is a little bit different. We are not going to get into that right now. What I'm thinking is that the government actually does stand the chance of collecting as much cash tax as possible for the noble uses that I've just mentioned. But it seems to me, if it wasn't for these sessions, and I've been working in this country for so long, there are so many things that remain so unclear. And I'm just thinking to myself, what else can KRA, for example, do other than just setting rules? How do you make sure that we the taxpayers or those who are going to be entering into the job market know these things ahead of time, so that is not set up for them to make mistakes unknowingly, and then in the process, even the government missing out on the collection. Because there seems to be, right now, it seems to be more, the interest is more in making sure the taxes are collected, as opposed to clarifying situation like this forum has just done for me on many instances right now. It's not a criticism, it's a critical engagement. Thank you.
Thank you. Mary, if you can mute Audrey Asudi. Mute Audrey Asudi, because it's becoming difficult for us to communicate with Audrey Asudi's mic being on. So Alex, again, a very short comment from you.
I'll be very brief. I'll be very brief. Thank you. Mine is actually a follow-up to the same Domi has said, but I really, first of all, want to really thank Kasim and Wanja because of how they have tackled these issues. But I also want to share, for the purposes of everyone, including our own members, that what we are finding here, and it's what the Wanja and Kasim are grappling to deal with, is to define a legal definition of the digital marketplace. What does it constitute? Because even the law was not clear when it was being drafted. And so in our memorandum to June to the Finance Committee, we foresaw these challenges of these definitions, because the moment you leave things to be determined by the cabinet secretary, then the law does not become clear, and the citizens then have a problem understanding when they are running afoul of the law. So there is something I want to say, we had mentioned it in our submission to when this finance DST was being introduced, and we see those results coming. But in this case, I want to thank KRA, because they're the ones who are left with the difficult now role of implementing that. But clearly, we have all seen during this call how difficult and challenging when the law is not clear on what constitutes a digital marketplace, and so that therefore taxation and other things fall in and citizens are clear about the law. So thank you, Prof. I will not belabor the point.
Thank you, colleagues. I must say, really thank you so much, for today. This has been a learning opportunity. I want to thank the team from KRA. I want to thank Madam Wanja Wangondu for the presentation, as well as the facilitation of today's learning. I want to thank Mohammed Kasim. Again, brilliant presentations from both of you. Lydia Alumbe and Martha Ngoko for really coordinating with me to make today possible. We are exploring, because there's also a question that Corey has asked, so how do I actually file my returns without having to go through a tax expert to do it for me? Is it possible for me to do it on my desktop? And I think that we will work together to find out whether we can have another session that takes us step by step in terms of how you can do individualized filing of returns without having to look for a finance officer or to look for a tax expert to do it for you. And so again, that will be an opportunity that the Creative Economy Working Group will open up for the sector. And as I conclude, just to also say that there have been a lot of developments with regard to intellectual property rights and so on. And so we are having discussions to see whether we can also help the sector through a training on these matters as they continue evolving, in our country. So really to thank you for today. I don't know whether Wanja, you want to say something before we wrap it all up.
Yes, thank you, Prof, for this last opportunity. Now, there's somebody who lays the issue to do with mental health and disability. Now, I wish to bring to the attention of this party, I can't remember their name, that KRA does not actually assess that. When you visit the panel at the Association of Persons with Disability, they have a panel of doctors who determine the extent of your disability affecting your normal life. So tell all these persons who have the given conditions and all that to proceed with that association. And once they proceed with that given association, if the panel confirms that this is a disability that's affecting the way a person lives, then KRA's hand will be tied and will issue the certificate. And the last thing that I want to bring to the attention of the members is that on the 30th of September, that is next week, we have an interactive debate handling digital service tax. And so I would want all of us to attend that engagement, where we will have our manager from the digital service tax, and we will also have somebody from the market. There is a firm that's assisting in that. And so we will forward the link to Professor so that Professor will be able to contact you with that link, and so that all of you can attend. It's actually a whole hour purely discussing digital service tax only. So any other concern that you have, bring it on that day. Thank you, Prof.
Thank you very much, Wanja, again for today. Colleagues, I want to thank you very much. Be on the lookout for other updates from our side. As I said earlier, the Creative Economy Working Group is committed to really helping the creative sector operate and to thrive and to grow, so that together we can contribute in the economic and social transformation of our country. And therefore, these learning sequences are really, really important. Do take care of yourselves. Make sure that you are vaccinated if you are not already vaccinated, and take care of yourselves. And God bless you. Thank you so much for today. Thank you.